Welcome to Limit Up, the weekly capital market podcast. My name is Don Collins. I'm a chartered accountant and business advisor of 30 years and a partner at Findex, a leading financial advisory and accounting services firm based in Australia and New Zealand. I'm here today with Ian Reynolds. Ian, thanks for coming along. Ian is a trader and investor, former bank foreign exchange market maker, early investor in Bitcoin and tech founder.
You Don?
Making money in stressed capital market situations is tough. A typical investment portfolio will often fail. The world is moving into really challenging times as the US tries to address a $38 trillion debt, contradictory fiscal and monetary policy, internal conflict, and numerous wars. And the rest of the world starts to consider a new global reserve currency, a multipolar world, and aging demographics. So how can we understand what's going on in geopolitics and macroeconomics? Here today, as I've said, is Ian Reynolds from Siberia Capital with his latest press release, All Roads Lead to Gold. Ian, do all roads lead to gold?
Seem to be. But the reason that it's non-sovereign, if you hold it yourself, there's no counterparty risk and it's nobody else's liability. So those are pretty simple things, but they're very, very valuable things at the moment.
Sure. And tell me, what of those things that have happened in the last week are telling us that all roads lead to gold?
Well, I think one of the telling economic statistics last week was that US GDP for the fourth quarter came in at 1.4%, expected 2.8%. It's still quite a good number.
Yes.
It's no longer what Trump's been bragging about.
And given the market expected more, how did they react?
Well, there's a certain amount of disbelief in the numbers to start with, which I'll go talk about in a second. But really, it's a credibility thing in that, okay, you can mess up lots of things, but if the economy is good, and everyone's making more money, you can get away with some things. But really, I'm a believer that Trump won't even get past the midterm elections at this stage because he hasn't succeeded in anything apart from deposing Maduro via a fake offensive, because I think that was all set up by the US and with possibly Maduro's acceptance, i.e. he disappears quietly with some money and promises not to come back again. Speculation, of course. But really, in 14 months, Trump, what has he achieved? Well, he's got less immigration, clearly. He has some more revenue, only $150 billion, though, which is nothing compared to $38 trillion in debt. And, you know, the story, of course, is that he hasn't even got that now. We'll talk about that in a minute. And just looking at this week, we've had a gunman shot and killed in Mar-a-Lago, which means sea to the lake. Did you know that?
No, I didn't. Thank you. You learned something new.
Particular part of Florida where the sea goes into an estuary, into a river or something.
Yeah.
So someone's tried to kill him, supposedly, in his own house or grounds. The Supreme Court suspended the tariffs without giving anyone any clues about how to get out of it, which wasn't very helpful. And, of course, there'll be loads of appeals and stuff like that, you know, what the American courts are like. And then he, of course, had fall back on some other temporary emergency legislation to keep 15% tariffs on the whole world for another 5 months, I think it is.
And those reintroduced ones were a little different to the ones that the court suspended?
Yeah, under a different law.
But the amounts of the tariffs were different as well.
Yeah.
Yeah.
I.e., it's a different action. So the president is not meant to be putting on tariffs singularly, i.e. on a single country. He may enact tariffs on the whole world, but only the Senate can adopt tariffs on a single country.
Right.
The hospital ship to Greenland, that was always quite amusing. And there's been some cartoons about them sending back 2 ships to America with mental hospital written on them. Probably politically incorrect to say that, but I'm just quoting what the cartoon said.
Yep. So a few people are up in arms with that, I understand. Or basically you told them, go away.
Who? About
what? With the hospital ship to Greenland.
Oh, I don't really know. I mean, obviously Denmark told him where to go.
Yep.
In a European way that he won't understand.
Yes.
I mean, there's no point telling him to go away because he doesn't even listen anyway.
Yep.
He's also going to release the alien dossiers, which is all supposedly things about flying saucers, UFOs, all that sort of stuff. Just, I suppose, in case that actually he's not mentioned in those dossiers, I suppose, because he's certainly mentioned all in the Epstein files. In fact, I think it was 38,000 times I read.
Right.
So he's one of the principal actors, no matter however he thinks of it.
All of this sounds like noise.
Yeah, oh yeah, it is. You know, we've got more kinetic action in Iran coming up for sure, maybe Cuba.
Yep.
And as you know, I say every week, blah, 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 it's still bankrupt. Or insolvent going on bankrupt because it's a country, the two things. And you know, so he hasn't achieved anything so far. All this stuff is coming back to hurt him.
Yep.
Now GDP's lower.
Yep.
And given that the pace of spending on AI, if your GDP is going lower, then I would think that AI spending is going lower, i.e. there's no more money to spend on it. And the administration have rolled the dice on it being the thing to propel the economy forward. And if that starts to fail, and there's many people predicting that, then it's going to be recession or worse for America for sure.
Right.
We had the PCE inflation numbers up, so that's personal consumption ones.
Yes.
That were higher than expected, in stark contrast to CPI last week, which was lower than expected, which no one believed. The PCE data is put together by the US Bureau of Economic Analysis, and the CPI is put together by the Bureau of Labour Statistics, whose head he has just appointed. And if you remember, these were the ones that in the Biden administration had to have revisions of millions from the employment roll.
Right.
For various reasons, but you can't blame it all on the government shutdown because it was politically motivated.
Yep.
So if you want trust, there isn't much of it about.
No.
I guess the main thing is that if GDP is going lower and the US dollar has declined 11% in the last year,
yes,
and we have interest rates way higher in the States than in Western countries,
yes,
flow of capital in America is clearly zero.
Yes, exactly right. Yeah.
Not to say that de-dollarisation is accelerating, but at 4% against Europe's 2%, just wildly rounding out, you'd think there would be people wanting to double their return in the risk-free currency, as it's
capital flow in the right direction as a result.
But that hasn't happened.
Yep.
I mean, otherwise we've seen Blue Owl, which is a private credit fund, withdraw suspensions.
Right.
Suspend withdrawals even.
And how large are they in the market?
$300 billion.
Right.
So this is the equivalent of, all these things that went awry in 2008.
Yes.
Loan obligations where lots of mortgages were put together and supposedly graded by the agency who turned a blind eye because they were being paid by the people who were asking them to grade them.
Yep.
And therefore you got lots of triple Bs in with double A's and A's, and we know what happened.
Exactly. So, but we know, as you know, history repeats itself.
Yep, it is. Very much so. So, and also loan delinquencies spiking. As we were saying earlier, the interest rates have been kept high in America because of inflation that the Fed thought was transitory and got it very wrong.
Yep.
Now the Fed's getting it wrong, seemingly keeping rates higher.
Yes.
We'll find out whether that statement's correct later.
Yep.
But with all of the American banks, particularly the regional banks that have lots of really bad CRE debt, commercial estate debt, because they're forced to hold US Treasury as part of the banking system, i.e. money is debt.
Yep.
They've got to take massive haircuts on their US Treasuries, the risk-free trade, right?
Yep.
So this is what made bankrupt those three banks a few years ago.
Yep.
And you can't help feel that all of that is just building up into a big problem, especially with the rise of synthetic risk transfers, which is a derivative invented by Wall Street.
Yes.
Where banks can get rid of some of the risk on their bad debt by getting someone to reinsure it. So it takes it off the balance sheet.
Yep.
And pays some money to achieve that. Someone gets paid basically to cover a portion of it, to reinsure a portion of it.
Yeah.
But it just means that, those balance sheets are impaired, don't look impaired.
Exactly.
So no matter who has to take the haircut, it's still a haircut.
Someone's taken it somewhere.
Yeah.
You're just moving it sideways. So this is, when I think about our podcast, this is like another larger financial institution, suspended withdrawals and banks doing this. This is, and you said this is all mounting up. So, are there more that we should think will come up?
I should imagine so. Absolutely.
Are there any particular financial institutions?
Well, I think the American regional banks are really at the top of the tree there because, there's hundreds and hundreds of them. It could be a small towns bank, and all they do is lend to commercial real estate because nothing else to do, and buy treasuries when people put money in the bank. Both of which trades have been the worst in 50 years. So what can they do? Well, what the Fed did a couple of years ago is they had a facility where banks could give them their distressed bonds of the United States and get them back at par from the Fed.
Mm-hmm.
Which is why the Fed is now $900 billion in debt.
It's in debt, yes.
So you can pass it round as much as you like. And you can hide it on the central bank's balance sheet, but it's still there. Yeah.
And the headline was "All roads lead to gold and silver." What's happening with silver?
So silver's had a really good few weeks, and we'll take a look at the charts in a minute. And the March futures, which is deliverable at COMEX, basically there's not enough silver in the COMEX warehouses to deliver those silver contracts. And something has to happen to make that whole. Normally, higher prices bring out the people that want to sell, but if they don't, there might have to be some sort of default. I can't imagine there will, but it's a clear sign that those markets in precious metals that for most of my life have been so boring it's not worth looking at. They are really volatile, and if you have a really volatile market in the two things that are actual money, rather than debt, that's a serious situation to be in.
Yep. So let's have a look at those charts then.
I thought you'd forgotten to ask to look at them there. Give me one sec. Tell me when you can see it.
I can see it. Thank you, Ian.
Okay, so Bitcoin, it just keeps going down. This is the buy zone because of all this activity here around the last high, or after the last high actually, which was back here. That was the last high at $69,000. So this is really the buy area, but we're very early into the bear market. I was expecting this price to be in September or something, and you say, okay, well, I can start buying a few, but it's not looking good. And any rally is just hammered. And as discussed, that quantum computing is really putting it at risk, and lots of people thinking it's going to zero, but that's kind of like the way Bitcoin operates anyway. So the buy zone for Ethereum, it went straight through it, broke down, and we can see it's going back lower again today. This is chart-wise kind of like almost the last chance for Ethereum, because obviously hasn't been going very long. So this is zero here. And if we break this trend here, then it really could go to zero. So but I think there's much better opportunity with Ethereum at these levels than Bitcoin. Silver, as you can see, has had a decent bounce. Up at $87 this morning. It's been down, where was it, a couple of weeks ago? 70 odd. So even lower, wasn't it? Because it actually went to 64, didn't it? And 70 was the actual support level. So it's got well to come, but it needs to get above this level here to really start going high again. That's 92. Gold's looking a lot better. So it also had that big bout of volatility, but it's just overcome resistance. So if it can stay above here and break through this resistance as well, then we could see the all-time high again. And we'll go through the longer charts of that as we work our way across. The dollar, this is the Dixie, the dollar futures against the euro, yen, pound, etc. So we've tried to break higher 3 times now, and we kind of can't. This is the 15-year support here. So as of last week, we're all watching this to see which way it goes, because a dollar in a big move means lots of things. And we're sort of teetering on the brink at the moment. I've been expecting a bigger bounce, but it really hasn't got very far with it. US yields have come down on obviously lower GDP, constrained employment, non-farm payroll of 130,000, CPI lower than expected, and of course it's bounced with PCE on Friday. But here again, this isn't that far away from the rates when Trump got into power, which is our red line here. So, okay, we were up somewhere, let's call it 460, and it's now 410, so it's down 50 basis points, but the Fed has cut 75 basis points. But if they want to save the economy, this has got to be 2% lower. Because of all of those people that forced to buy treasuries with a yield a lot higher. Those banks, particularly. Stock markets, this is the Nikkei, which had a great run with the new Prime Minister's landslide victory. But really, this sort of move in a stock market is very dangerous, because this is the sort of thing you see in Turkey or Argentina, because it's the value of the denominator. So
Yep.
if your currency is going to nothing, then your stock market goes up nominally in your currency.
Yep.
And you can see that in the FTSE. And you can see that, I don't think the ASX is so bad, but it's definitely on that way.
Right.
In America, the S&P is doing what it's been doing for 2 weeks, which is looking like a top or a temporary top. This is the NASDAQ.
Yep.
And so everything is leveling off stock market wise in America.
Okay.
So we're looking for that next big move or geopolitical event or black swan event, I don't know, whatever it turns out to be.
Sure.
Talking about silver, this is the weekly chart of silver. And so let's just hide this, bring this up. So it really, this shouldn't be this volatile.
No.
But it is. And really, if the price is here 87, the price is really 70 to 95 in any volume.
Right.
Because dealers are awash with silver coins that boomers bought 40 years ago and have just turned up in the shop trying to sell, which they can't use. And where you can get real supply, probably somewhere up here, 195 or something like that. So it's become effectively a fast market because of lack of clarity.
Yep.
Gold is looking a lot better, and it's really recovered from this temporary setback. Of course, until we get above this crazy high of 5,600, we can't say that it's broken higher, but it's heading that way, surely but slowly. Silver doesn't look quite so good, but it's definitely heading in that direction.
The right direction, yeah.
And if you look at it on the monthly, if you're a long-term investor, then you got to say there's nothing wrong with that silver chart whatsoever.
Sure.
And you've got to say that there isn't much wrong with the gold chart. In fact, the gold chart just looks incredible.
Yep.
And given that this is $2,000, where I obviously bought some here, and now it's $5,000, and I bought it. When did I buy it? So look, January 23. So in 2 years, it's gone up 2.5 times.
Yeah.
Which, to be honest, if it's gold, tells you there's something really wrong with the financial system.
Yes, because that's what everyone's buying, and not what agreed. So thanks for that. What's coming up in the next week in relation to announcements or other information?
In terms of economic releases, not a lot actually, because it's still the Chinese New Year till the end of the week. Today is the Japanese Emperor's birthday.
Right.
Don't know which one.
Okay.
From America, we have PPI later on in the week and the usual initial jobless claims, etc. We're German GDP and European CPI, so it's pretty quiet. And
are you expecting any surprises based upon forecasts and previous announcements?
I'm expecting silver to be really volatile as that futures contract starts to be delivered by the time we talk next time. So actually it starts on the 1st of March. And I think that will drive a lot of markets because gold and silver are almost acting as the risk asset at the moment.
Right.
Crazily.
Yep, of course.
Bitcoin's acting like no sort of asset whatsoever.
No.
Everything else, stock markets are good if you're in a weaker currency and just stuck if you're an American stock market.
Okay. Well, thanks again for sharing your geopolitical and financial information this week. It's always great to hear your insights. I think if there's nothing more, we'll wrap that up for this week. Thanks everyone for listening in. And just to mention that this and previous podcasts can be located on the Siberia Capital website. Or you could subscribe by accessing the link at www.siberia.capital/contact. Thanks again, Ian.
Thanks, Don. See you next time.
See ya.
Cheers.